example of adjusting event. Okay, example, a customer thought to be good in the financial year 2014, later found to be bankrupt on 15 January 15. So on the financial statement, you reported those customer as an trade receivable, but later when they goes bankrupt, of course they cannot pay their debts. So you need to correct them. Okay, the bankrupt condition existed during the financial year 2014. So that's why it become an adjusting event, because the bankrupt condition existed, because those are your customer at the end of the financial statement. So the real status is only known on 15 January. So what do? You have to write off the customer as bad debts or expenses for the year 2014, because the customer went bankrupt, they cannot pay to you. So of course you cannot show in your financial statement as if that you will realize those trade receivable, because you are not going to receive money from this customer. So you need to write off as bad debts. Okay, next one, at the end of year 2015, the inventories were valued at 50,000. So this is what you have reported in your financial statement in your SOP. However, in 2 weeks later, okay, during the adjusting event, the inventory was sold at only 30,000. Okay, this is the net realizable value, because when you value your inventory, it should be at cost or at the lower of cost and net realizable value. So in this case, you see that the lower will be 30,000, not 50,000. So what you have reported in your financial statement is not correct. It has been overvalued. Therefore, you have to adjust your inventory value and the profit downward. Okay, so you have to reduce your inventory and your profit for 2015. So this is adjusting event. Alright, now related to action by customer to sales in year 2014, and the amount could not be determined precisely. So in 2014, when you prepare the account, you have been sued by your customer, but at that time you cannot, the court cannot identify how much should the company pay as a compensation. So under that MFRS 137, relating to provision, when you cannot identify the amount reliably, then you should not show that in your financial statement. You simply show that in your notes to the account. So that when you prepare in 2014. But after that, 31st December 2014, you identify that, okay, between this date, a settlement was reached and the amount of liability was positively determined. Okay, so during this period, you identify, okay, the amount can be measured reliably. Therefore, you have to adjust and you have to show that compensation in your financial statement. Okay, because the status has already existed in 2014, and what happened after that date has firmly show that it is expenses to the company. So the treatment would be, the financial statement must reflect the amount of settlement which is as at 31st December 2014. Okay. Alright. Next, during audit, a fraud related to year 2014 was discovered. A fraud related to year 2015 was discovered. The fraud was intentional to increase profit by valuing inventory higher than reality, or the fraud about company maintain high profit by not writing off as bad debts or receivable. The bad debt is passed on to the later year. So the financial statement for the year 2015 must be adjusted. Okay, this example, we're assuming that we are in 2015. So the adjusting event, okay, occur after you close that 2015 account. So there was a fraud. Of course, you have to adjust. You have to make adjustment, just like what you did in MFRS 108 accounting policy change in accounting estimate and errors. Okay, we have to do the adjustment. Okay. Now, what is this? Two events were found by the auditors in the course of preparing published financial statement. Okay, a debtor of 10,000 was found bankrupt on 20th January 15. Okay, a batch of inventory costing 20,000 were not accounted in the closing stock at 31st December 14. Okay, so now the financial statement that you prepare is 2014. Okay, so after that date, after the closing date, 31st December 14, you identified that one of your debtors went bankrupt. So of course you have to adjust the trade receivable amount. And then also you find that the inventories costing 20,000 was omitted. Okay, of course you have to add them. Okay, you have to add them. So this is before adjustment. Your receivable is 50,000, your inventory is 150,000 before adjustment. So when you identify those this event during the event after the reporting period, okay, so you have to adjust. Okay, both events are related to condition existed in 2014. So you have to reduce your account receivable, and you also have to increase your inventory. So this is after the adjustment, right? You reduce your bad debt, your trade receivable, and you have to show it as your bad debts, and then your inventories, okay, you have to increase it, right? Alright, this is example of a non-adjusting event where you don't have to adjust your financial statement, but you merely show it in the notes to the account. If there is any business combination, discontinued operation, major acquisition and disposal of asset, expropriation of asset by government, destruction of some section of business by flood, natural disaster and fire, and litigation cases that is potentially damaging after the balance sheet date. Okay, entering into significant contract are securing big contract, change in tax rate, major transfer of shares, share split, and proposed dividend. Okay, proposed dividend is a liability, but that liability does not exist on the financial statement date, so you don't have to adjust your financial statement. Okay, this one I have explained on the dividend and the going concern. Alright, thank you. That's all. Bye. Assalamualaikum.